But you're all about evictions, job losses, money for the bosses.
Anger outside the Reserve Bank's headquarters.
We're the ones who are facing rent hikes, we're the ones who are facing mortgage hikes.
As the pain of rate rises is felt beyond homeowners.
We're protesting today because inequality in Australia is out of control.
In just over a year that they've been doing so.
These university students expect to be caught up in an economic downturn.
This is not just about raising interest rates and mortgage rates, but it's also about an economic strategy which is going to drive up unemployment and make the lives of young people, young workers who will face the brunt of it worse.
Tax the rich.
We think that the unemployment rate will increase to about 4.5% at its high. So yes, there will be a broader impact to the economy from rising interest rates.
The Reserve Bank kept rates on hold in July at 4.1% as it assesses the effect of 12 rises since May last year.
For many Australians, some much needed relief.
Bring down inflation.
Among them is recent first home buyer James Yude.
It's nice to have that little bit of a break, but it's definitely still worrying that they're probably going to go up another couple of times.
The Perth teacher bought less than a year ago with only a 5% deposit thanks to a government scheme, but it's left him paying 45% of his income towards his mortgage.
I felt it most the other week. It's sort of when I realised how painful it was because I had a couple of unexpected costs come up and then I had to pay for fuel and I had to move money from like my emergency savings account to pay for the fuel for the car.
Research from Roy Morgan estimates 1.4 million borrowers are at risk of mortgage stress, even before the June rate rise. That's the highest number since 2008. RBA Governor Philip Lowe says more rate hikes may be required. And while the pause gives the board time to assess the risks to the economy, it remains resolute when it comes to bringing inflation down. Economist Diana Musina is still forecasting 2 more rate hikes to take the cash rate to 4.6%.
So in my eyes, the risk of a recession haven't changed. I still think the risk of a recession here in the next 12 months is about 50%.
Small Business Debt Helpline, Anna speaking.
It's not just homeowners struggling with the current uncertainty.
I had a call this morning which I think is probably worth discussing with you.
Financial counsellors have seen increased demand from business owners over the first half of the year.
We've seen 50% more small businesses call us than for the same period last year, so that's a significant increase.
She has actually spoken to her bank, but
the helpline's general manager, Helen Davis, says many operators are feeling the pressure on 2 fronts.
So they're juggling the rising cost of living as individuals. Their customers have cut back on their spending. Increasingly, we're hearing from businesses say that their revenue's dropping. At the same time, their business is facing an increase in costs.
Is that around the comfort level that you're after?
Yeah.
Okay.
For those wanting to take on debt, the July pause is welcome news for mortgage brokers working through their applications.
Definitely will give us some breathing room. We won't have to go through and reassess all our pre-approvals and have those difficult conversations with potential borrowers.
With every hike, the borrowing capacity of prospective buyers is falling.
People are very hesitant at the moment in terms of what the future holds. I don't think it's going to change many people's behaviours because they'll probably expect an increase next month.
1 month of certainty, but an unclear economic outlook.